Well, dear guests, ladies and gentlemen, good afternoon, and thank you for joining us today. On behalf of the ATHEX management team, it's my pleasure to welcome you all to this forum, organized by ATHEX in cooperation with EIF, aimed at promoting the IPO fund of the InvestEU initiative. As we all know, InvestEU is a flagship investment program of the European Union that aims to mobilize private and public investment to create jobs, foster growth, and promoting innovation across Europe. This initiative aims to support companies around the IPO space by providing them access to long-term capital and helping them navigate the process of listing on a stock exchange. In other words, the InvestEU initiative presents a unique opportunity for business and investors alike to access long-term funding on very favorable terms, while also contributing to the overall economic development of the European Union. Acknowledging the importance of this program, we at the Athens Stock Exchange were very proud to partner with the European Investment Fund in promoting the InvestEU initiative. By supporting IPOs, we're not only providing companies with the funds that they need to grow and expand, but we're also supporting the growth of our economy, giving investors the opportunity to invest in innovative and promising companies which have the potential to deliver significant returns in the future. Today's forum is a unique opportunity to learn more about the InvestEU IPO fund and how it can benefit businesses and investors alike. As you all see, we have three distinguished speakers from the European Investment Fund who will be sharing their knowledge on this topic, and we hope that their presentations and the information that they will be providing will stimulate a productive discussion at our Q&A session, and eventually will lead to fruitful partnerships in the future. We are grateful to the European Investment Fund for their support and partnership, and we would like to thank them very much for their presence here today. So after this very brief introduction, please allow me to provide you with a brief overview of our agenda for this event. As you can see on the screen, first we will hear from Ms. Vivi Papasouli, Mandate Manager, Equity at the EIF, who will give us an overview of the European Investment Fund and its activities in Greece. Following Ms. Papasouli's presentation, we will continue with the presentation about the InvestEU program by Barry McGrath, who is the head of the Innovation and Growth Finance Unit at the European Investment Fund. Finally, the last presentation on our agenda aims to explain to all of us exactly how the European Investment Fund supports funds investing around the IPO stage under the InvestEU initiative. I know we're all very interested in learning more about that. Nicolas de la Vallée-Poussin, Senior Officer, Mandate and Product Development at the European Investment Fund, will deliver the presentation. Following the presentation, as I mentioned before, we'll have a Q&A session where we'll all have the opportunity to discuss and ask our speakers any questions you may have about the InvestEU IPO fund and how it can benefit your business or investment portfolio. After the Q&A session, and before we conclude the event, we would like to invite you to join us at the foyer outside for a networking drink reception, which will be held. And this will be an excellent opportunity to meet and network with our speakers, amongst ourselves, and exchange ideas. We hope to see you all there. We believe that today's forum will provide valuable insights and ideas that will help you to take advantage of the opportunities offered by the InvestEU initiative. Once again, thank you all for joining us, and we look forward for a very engaging and productive event. Thank you.
Hi, good afternoon also on my side. My name is Vivi Papasouli. I would like to thank you for inviting us here, to thank the Athens Exchange Group for actually getting in contact and organizing all this event and actually bearing with us as we were a bit late in delivering different things that were requested. We are very excited to be here. And before we dive into the IPO fund and the InvestEU initiative that is deployed at the European level, we thought, even though I see a lot of familiar faces in the audience that actually know what we do in Greece, we thought we would just give a very short introduction
of what the European Investment Fund is and how we operate at the European and regional level, just for the benefit of everybody. So to start with, I think we always thought that the European Investment Fund is here, and its main reason of existence is to support European SMEs access finance. We have some big numbers of 2 million SMEs already financed, 14 million of jobs supported, but our key role is actually to promote the EU policies and priorities in order to help the SMEs in Europe grow. So the way we do that is actually, we are a unique investor. We are part of the European Investment Bank group. Our mother company, the European Investment Bank, primarily targets global loans, working with the public sector and bigger projects. We specifically focus on the SMEs. We have more than 25 years of experience in addressing SME financing gaps. Actually, I think we are celebrating 30 years next year. We are a public-private partnership, so our key shareholders are the EIB and the European Commission, but we do have part of the shareholders who are national financial institutions across Europe, including one in Greece. We have a AAA credit rating, and we have more than a 7.37 billion own capital base. And we have, throughout all these years, supported more than 1,400 private equity and venture capital funds throughout Europe, with more than 40 billion of commitments to these funds. Now, the way we actually... Okay. The way we work, so our key resources come from the European Commission, the European Investment Bank. We have our regional business, which is actually doing business with the local authorities and the national promotional institutions and the governments and the authorities on the ground, which is actually the regional business that I am part of. And we have other investors, including private investors. So the way we operate is we take the public resources entrusted to us by the different type of mandators, what we call our mandators, and we design and deploy financial instruments that target specific funding gaps that we identify either at the European level, in cooperation with the European Commission and the European Investment Bank, or at the regional and national level, in cooperation with the national and regional authorities and the national promotional banks. So we have two main categories, let's say, of financial instruments, equity and debt. One thing to note, the European Investment Fund does not finance SMEs directly, so we always work through financial intermediaries. So we select and provide financing through funds for our equity business, and we select and support banks or other institutions, depending on the geography, for our debt and guarantee business. And through that, because we share the risk with the financial intermediaries, we leverage, in average, 5 euros of private resources for each 1 euro of public resources committed and deployed on the ground. Okay, it needs a bit of a push. So the benefits of our approach. We increase the overall supply of finance for small businesses, especially through this leveraging effect that we have, because we share risk with our financial intermediaries. We target specific funding gaps, be it at the EU level, that follow also, obviously, the EU policies and the EU priorities that are set. It's 7 years, what we call the programming period, which is actually the budget of the European Union. We do that at the national and local level as well. So whenever a regional or national authority comes to the EIF offering money to cover a specific financing gap on the ground, we always have our separate market assessments and see whether this money is actually needed on the ground. And because we do not want to crowd out private investors, we don't want to crowd out existing financial intermediaries. So we give increasing financing options wherever the markets do not work well. And through this business, we nurture ecosystems. So we partner with both established financial intermediaries in more mature markets, and in areas or regions of the European Union when the market is not so advanced as the EU average, we actually work and partner with new partners that can help these markets thrive and become more mature ecosystems. I will inevitably focus a bit on the equity side, which is, I think, our business here. So we have 3 equity financing solutions. So we help in the market failures where there is problem with the fundraising as a market builder. So we take a large stake of the funds in less mature or completely immature equity markets. We act as the cornerstone investor in these markets and help them actually to mature. And we will have the Greek example later on to discuss on this. We attract private investor capital. So I think the EIF has a very, very thorough and strict due diligence process of evaluation of fund managers, be it established fund managers or new ones. So basically, the fact that we ourselves invest in funds is actually a seal of approval for other private investors to also come in and support these funds, and this is how we catalyze also the market. And we also help established partners in closing larger funds or later generation funds. And this is a market access provider. I think this is more or less the area where also the new initiatives like the IPO fund, the scale-ups, and the European Technology Champion Innovators funds come in at the later stage when the funds are more mature. So through this, we increase the availability of finance to the SMEs, but we also increase the availability of specialist investors. So we also help the asset class understand and entrust new or existing teams in order to establish bigger or better funds. This is part of our core business, our public policy goals. In principle, we follow the European Commission, who is our mandator, and in our continued commitment to support SMEs across Europe, we are aligned with both the Paris Agreement and the InvestEU. The EIB is the Green Bank of Europe. So we have 4 main public policy goals: competitiveness and growth, innovation, the social impact, skills and human capital part, and then sustainability and green transformation. That is obviously a big part of what we do. Okay, that was too fast. No. And we actually cover the whole range of an SME life cycle. So depending on where an SME is and how it grows, we have a lot of financing options on the ground to support them from the pre-seed phase, from business angel stage, technology transfer. These financial instruments, some of these are actually active also on the ground in Greece, all the way to the seed phase, to inclusive finance, venture capital funds, and social impact funds for a very specialized category of enterprises. Moving on to the start phase, and then to the emerging growth, where we actually pass on to private equity and to other debt and guarantee products. So this is an overview of our resources and how we have grown actually through the years. I will not go through the whole chart. It's just to show that our business actually has increased significantly, starting from 2016, when the FC initiative, what we in Greece know as the Juncker Plan, was deployed at the European level, and moving on after 2020 with the COVID initiatives, and now with InvestEU, which is the flagship program of the European Union. So in Greece, the European Investment Fund has been around for almost 20 years, most actively the past, I would say, 14. These are numbers that are from inception. So the total of committed resources of the European Investment Fund so far, and this covers all of our business, so debt, guarantees, and equity, amounts to 3.8 billion, leveraging 13 billion on the ground. And we have the split between the equity and the debt instruments, and a small portion for microfinance and social entrepreneurship. For us, what is most important is that we have supported over 40,000 SMEs and mid-caps in Greece, and we have actually supported more than 310,000 jobs, which are actually counting at the time of investment. So we supported companies that at the time of investment had all these people employed, and we helped them actually grow and get more people on their jobs. And a quick overview of our equity mandates, just not to confuse the audience. This is what I mentioned before. This is our regional business. So this is where we actually work with the Greek government and the Greek authorities to deploy initiatives on the ground in Greece. This is a different category of initiatives than we have at the European Union level, where actually funds and debt initiatives are also supported from there. So we started back in 2010. At the time, almost inexistent equity market, more or less. So we started with Jeremy Greece that had both a debt and an equity part. On the equity part, we started, well, in retrospect, small, but at the time with a big amount of 50 million. We supported 4 funds, all in the ICT sector. The funds are now in their final divestment period. We have supported 63 companies through 69 co-investments. And even though the total process at this stage against the public resources is 31 million, and even though anybody can debate that this is not amazing results in terms of pure financial results and returns, I think our main argument here is that, first of all, this is the first time that public resources were given to financial instruments. So we actually have money coming back of public resources instead of just giving away grants that you never know where they end up and how they are actually received by the market and exploited by the market. And the second one is actually that Jeremy put the seeds on the ground to start developing the venture capital system in Greece. So after 2010, or in 2016, we partnered again with the Greek government. We put on the ground the Equifund initiative, 200 million of euros from Greek public resources. At the time, actually, the European Investment Fund coupled these resources with another 60 million of its own resources, which was also a proof of trust from the European Investment Fund on the market and on its potential. We have supported in total 9 funds in, I think, more or less all stages, innovation, early stage, and growth. Total proceeds already exceed 35 million, with half of the funds not even reaching their last investment year. And up to now, we have supported 133 companies with almost 290 million. And the most important thing is that these 133 companies have actually leveraged more than 765 million at the portfolio level, which means that as these companies grow, they mobilize more money from private investors or the bigger funds outside of Greece. So for us, this is a very big proof of their potential. And I'm sure, I mean, most recently, Augmenta's buyout was announced 1 week ago. There are a number of very good companies coming out of these funds and actually being bought by market global players and putting Greece on the VC map. And then in 2020, somewhere there with the COVID crisis that hit everybody, we were also checking a bit the market and realized that the innovation stage of Equifund did not go as early as we would have hoped for. So there was still a gap on the pre-seed stage of companies. We actually used money that came back from the previous initiative. So we used money that came back from Jeremy. So the Greek government just allowed us to continue managing the resources. And we put together a business angel co-investment fund with the purpose of obviously supporting these very, very early stage companies at pre-seed stage, but also building up a business angels community in Greece that was a bit off the radar. So the fund has already managed to have a lot of LPs in its cap table. It has a requirement to co-invest 50-50 with private investors, and it has already supported more than 14 companies and launched its day one accelerator. So not to bore you, last slide. These are our debt mandates then in Greece. Again, 2010, the Jeremy, as I mentioned, was a mixed initiative. So it also included its debt part with a size of 141 million. We had 9 transactions with the financial intermediaries that basically included all 4 systemic banks on the ground. The principal repayment amounts stand at 90%, and a total of 3,143 loans were dispersed through these agreements. In 2019, a guarantee on the agricultural fund, from the agricultural fund, was actually given. So that was focused more on the agricultural sector. We have 7 transactions with financial intermediaries, and the overall size of the mandate is 350 million. Up to now, we have a total of 499 transactions to 484 SMEs. And then 1 year later, again in 2020, we had the EIF Guarantee Fund for Greece, 450 million, so guarantees given out to the banks. The number of transactions is 5. This is a more generic guarantee fund, so targeting competitiveness and growth of SMEs. And the number of jobs supported so far exceed 25,000, with a total of almost 1,600 transactions already been signed. So this is how we have been active in Greece, and this is more or less who we are and how we operate, both at the EU and the regional level. And I think I will pass this on now to my colleagues to actually drill down on the IPO initiative. Thank you.
Thank you, Vivi, and good afternoon, everyone. And a special thanks to the Athens Stock Exchange for having us here this afternoon. I'm going to first introduce InvestEU a bit more horizontally before my colleague Nicola elaborates on the IPO initiative, because they work hand in hand. So the IPO initiative sits on top of what we do more generally in venture capital and private equity. Maybe to start, what is InvestEU? InvestEU is the European Commission's investment programme for the next 6-7 years. It is supposed to stimulate investment in key areas that are important for European Union. And you'll see that reflected in what EIF does under InvestEU. We launched InvestEU last March, or a little bit later actually, I think April. And we have invited the market to step forward with their proposals that fit with what I will describe to you. We've had a very strong response. In some areas we already actually have more demand than we have resources. So we are selectively going through the applications and processing them to see what fits with what we are trying to achieve. That said, we do have budget that will allow us to continue supporting funds that fit with InvestEU until 2027, and actually sign up until the end of 2027. So it's still a relatively new program or young program with several years left to run. As Vivi she showed you a chart about the kind of the life cycle of SMEs. Under the equity product of InvestEU, we actually cover from very early stage right up to the IPO stage. So irrespective of the size of the business, we want to make sure that there are funds there that can provide equity financing to continue the growth. Typically, we invest alongside other investors or limited partners in fund structures on a pari passu basis. So we have the EIF has the same risk, same reward. We do have the capacity under InvestEU to invest on a non-pari passu basis under a program called Escalar, which actually may also be interesting for the IPO initiative. It's something we reserve for supporting scale-ups, but many of the companies that would be, entering the public market are already at this stage. For those of you who know EIF and know our activities from the past, historically we had been more sector agnostic in terms of the strategies we were supporting, and more stage focused. So we had venture capital, which was on the earlier stage, private equity, which was continuing to support the growth of the businesses. Under InvestEU, we are really zoning in on a number of thematic areas and really looking for funds that have strategies covering those areas. At a high level, digital and climate are the main priorities under InvestEU, but it goes beyond that. There are a number of other sectors that are deemed strategically important to protect European Union resilience in key sectors like life science, defence, space. And there are also a number of other horizontal priorities that I'll mention. IPO is one of those. Gender is another, also less developed regions of the EU. In terms of what are the strings? Well, InvestEU is an EU program, so it shouldn't be a surprise that when we invest in a fund as EIF under InvestEU, we look for a minimum amount of investment in the EU, but also in the target areas that I'll elaborate. And that'll be something that we contractually require of the funds that we support. Vivi in her presentation talked about the different stages of the market that we support. Under InvestEU, we're really focused on those funds that maybe have less experienced teams or are in geographic areas where the ecosystem is less developed. And we recognise that those funds will need more support than more established teams. And under InvestEU, we have the capacity to increase the intensity of support so that those funds can successfully fundraise, can make their first closing, and can start to build up track record for future fundraising. And then finally, there is a strong focus on less experienced teams under InvestEU. So the main product that we have under InvestEU for venture capital and private equity is what we call this joint equity product. We have a little over 6 billion available for us to commit to the market. So it's in absolute terms, it's relatively large. But like I said, we have a lot of demand for it. In terms of the areas that we can support, we group them around 4 families of areas that we want to target. The first one is the Capital Markets Union. There, it's a generalist pocket, so it's not focused on any sector or any one sector. Really what we're trying to do is to ensure that there's growth capital available for businesses to continue growing in the EU. We're looking to make sure that businesses have diversification of funding sources. So under this product, it's not only equity funds that we support. We support funds that are providing hybrid equity and actually senior debt. So the idea is that companies are no longer reliant on bank funding, which is something we see across the EU. This Capital Markets Union product, because of the sector agnostic focus, means that it's probably the one that we would see most of the IPO funds being supported under. The other 3 families of products, there's one called enabling sectors, which is really the strategic autonomy areas of the EU, like space, defence, life science, industrial technologies, and semiconductors. Digital economy remains a key focus for EIF and for InvestEU, but we're more focused on deep tech. So you'll see AI, blockchain, cybersecurity, quantum, but also edtech and creative media. And finally, we have climate and environment solutions, which is what we are trying to do to support the acceleration of technologies or of technological development in respect of the green transition and Europe's transition to or achievement of the Green Deal. Here it's what you would expect. It's green mobility, energy efficiency, renewable energy, transmission, but also agriculture and blue economy. Actually, sorry, just one final thing to say. It's not that you must, when we have a fund that applies to InvestEU, that you must address one of these distinct products. Actually, what we see, and what is normal, in fact, is that a manager will have a strategy that actually covers multiple areas. So if any of you in the room have a strategy that may be addressing several of these, that's normal, and that's how we would expect a lot of the applications to look. A very quick slide to show how we split the budget that we have available. The climate and infrastructure funds is not so relevant for this audience, but the 6.5 billion I mentioned is split roughly in these proportions, and you can see that the Capital Markets Union focus, which is the one I think is most relevant for the IPO initiative, has the largest budget available. There are a number of horizontal objectives that sit on top of the thematic focus that I mentioned in the other slide. The first is scale-ups. I think over the past 15, 20 years, EIF has worked hard to strengthen the European venture capital and private equity ecosystem. I think it's recognised that one of the weak points remains scale-ups. Those companies that are the fastest growing and have the largest capital need struggle to raise that money in Europe. So we're trying to address that more generally under InvestEU, but also via this novel structure, Escalar, where we have a kind of a less risk than a normal investment, and the idea is with this less risky share class we can catalyse insurance companies or pension funds who maybe want exposure to certain types of private equity asset class but maybe don't have the risk appetite. IPO is a horizontal objective. Nicola will elaborate on that shortly. Cohesion is very important, and it's especially important given we're in Greece. Greece is one of the countries that is recognised as having a less developed ecosystem, and therefore we want to make it one of the priority countries under InvestEU. And we have, you'll see later, tools to do that. And finally, gender and female representation is very important under InvestEU. We have a target to support gender diversified fund teams under InvestEU, and actually we're doing quite well on that so far. We're close to 40% of the funds we've supported actually have gender diversified teams. This is a more general slide on InvestEU, but it's very relevant for IPO. I mentioned already that under InvestEU, we can be flexible in terms of the level of support that we provide to a fund. Typically, EIF does not represent more than 25% of the overall commitments to a fund. And that'll be the case for a lot of InvestEU as well. However, we do have the flexibility to increase our participation up to 50% for quite a few types of strategies. The first one are our first-time teams. They struggle often to close their fund. EIF is there to help the market develop, so we have a particular interest in supporting first-time teams. The countries with less developed ecosystems, Greece, we have a flexibility to increase the firepower. Escalar, the 75% is to do with the strategy of the fund. So, for example, if you were a fund manager and you were focused on energy efficiency and renewable energy technology, and that was the entire amount of your strategy, then we can increase our support. Gender, collaboration with foundations and philanthropic organisations, and then business angels. While this shows how we can increase the flexibility, it also shows where our sweet spot is also under InvestEU. So these are the types of funds that we really want to support, and these are the funds where we have the mechanisms to support. We can go above the 50%, but it's in a very kind of a narrow set of circumstances. Tech transfer and social impact are probably not so relevant for this audience and the IPO initiative. Green and digital could be, but this is to do with a situation where EIF is collaborating with another, what we call implementing partner under InvestEU. That I'm aware of, EBRD is probably the only one that might be in this category. Final slide from me, just to summarise a little bit more about the things that we look for or require even on the funds that we support. First, there is a focus on SMEs and mid-caps that are in the EU. We do tolerate a certain amount of larger companies or companies that are outside of the EU, but the focus must be on EU. The fund vehicle must be in the EU, but the management team may be in another country outside of the EU. We can go up to 100 million with our ticket. That's rare. I think most of our commitments are below 50 million, but we do have the flexibility to increase that. And typically we have to be over 7.5% in the funding, the closing that we join. We have a preference for joining early in the fund life, so typically at first closing. We can join later, and we do join later, but it's more an exception rather than the norm. And that reflects actually normally, managers approach EIF early in their fundraising. We're seen as a good counterparty to have on board, and it's typically something that helps them in fundraising with other LPs. Finally, just to say that given the strategic importance of space, defence and cybersecurity, there are some additional requirements that come with an investment in these areas. And that's it from me. I'll hand over to Nicola and look forward to taking some questions. Thanks.
Still on. It's good to speak to you today. Good afternoon, and thank you again to the Athens Stock Exchange for having us. I'm going to take you through the IPO initiative under InvestEU. It's important to note that everything that you hear about the IPO initiative sits under the rules that Barry has already described. So the InvestEU is the product, and IPO is a sub-product within that program. So why do we have an IPO product? What is it that we're trying to achieve? And what is it that we're exactly supporting in this context? We want to support funds that in turn support companies that are transitioning from private to public. We want to help indirectly companies that want to list and that perhaps need little help doing so. So we're looking for funds that are willing to act as an anchor investor in the companies that list. We want to invest in funds that will assist those portfolio companies as they transition, not just in the moment of transition with money, but also because a lot of these companies will not necessarily know how to go about preparing for an IPO, will have gaps in their knowledge, will lack the necessary expertise, and there are funds that are capable of supporting them in this, not just with funding, but also with expertise, advice, and perhaps synergies with other companies in their portfolios that have done the same thing. The purpose is to provide long-term capital to these companies as they list, in order to give them some stability as they land on the market, such that as they begin their early days as a listed entity, they have a solid shareholder base of supportive and long-term shareholders, and they know that there is some patient capital in their capital structure. We say that we follow or that we support three strategies through the IPO product. We pre, at, and post IPO. And the reason that we split them up is because the needs are different at different stages, but we're looking for funds that will support companies not just at the moment that they list, but in the preparation and the post IPO phases. So the funds that we will support as a criteria for investment, we will verify that their strategy does actually say that it will support companies planning to IPO in the next 12 months, companies as they list on an EU exchange, and companies that have listed on an EU exchange that require perhaps further capital in the future or the support of a long-term shareholder. Although, as an aside, that third strategy, we don't follow or we don't support funds that follow only that strategy. We require them to be at least at IPO as well as post-IPO. Obviously, we're not looking to support, if you think about our objectives as the EIF, funds that are interested in speculative trading on markets. That would be completely undermining our purpose in this regard. So Barry described the InvestEU product. The companies that the fund supports must also be coherent with the InvestEU product. So in addition to having an IPO strategy, as I've described it, the fund must also support companies that are eligible under the InvestEU initiative. So if and when you apply to the EIF for an investment under IPO, it's worth bearing in mind what our objectives are, because that's the lens, that's the context in which we will evaluate any candidate. So what are we trying to achieve? As Vivi pointed out, we aim to catalyze additional investments. We try to be catalytic. So we put a certain amount of money into a fund in order to encourage other investors to co-invest alongside us in that fund. We also look at the investments that fund has made and the additional capital brought into those investments at the portfolio company level. So we're putting in an investment in the fund ourselves to attract co-investors in those funds and draw further investment at the IPO level on the market beyond those funds. We're trying to have a leveraged effect. The impact that we hope to have is in two different sectors. It's the impact on European companies and the impact on the European market. And not to read the slide out, but just picking a couple of points out, some of these factors can have a very outsized effect on the success of a company. The presence of a reliable, well-regarded investor in the fund's capital structure, in the company's capital structure, provides a very powerful signaling effect to the market. So if a company lists with a few known names in its investor base, that provides it with a real head start on the market. And we think that's a very important thing. We're looking for funds that can provide that, among other things. We want funds that will provide long-term capital, patient capital, that will support their portfolio companies, not just at the moment of listing, but as they go forwards on their journey on the stock market. It's important to us also to help these companies attract foreign investment, not just foreign, but attract wider investment. By listing on the stock market, we expect them to be able to draw investment from a large number of other entities that perhaps wouldn't have considered them when they were private, not just foreign investment, but perhaps funds or strategic investors or systematic investors in the market. And that will help them grow and, in addition, assist in bridging the scale-up gap that Barry mentioned. In terms of our impact on the European market, obviously, on a more strategic level for the EU, it's important to make sure that companies find listing in the EU an attractive option. It's true that to a certain extent companies may leave the European Union at the moment of listing because they find it more attractive elsewhere. We're trying to reverse that trend in a big way to retain the jobs, the creativity, the innovation, the patents, and all of that future growth for the European Union. The development of the IPO market for us is a critical factor. It's very important for us that being able to list on a European market is something that a company doesn't find an overwhelming challenge. Now, you can only reduce the regulatory barriers so far. There comes a point where assistance from more knowledgeable parties, the synergies of other portfolio companies becomes an essential ingredient in a successful listing. When you apply to the EIF, what should you expect in terms of due diligence, in terms of assessment, especially in the context of an IPO application, an application to the IPO product? The due diligence breaks down into a number of areas. I think most of this is fairly self-explanatory, but obviously in the context of the IPO, we're looking for funds that support companies through a public listing. The criteria of the InvestEU product remain. So is the geographic focus good? If you're in Greece, you're in a moderate or emerging innovator country according to the European competitiveness scoreboard. So that's an innovation scoreboard. So that's an important factor. But also the thematics of focus. How well aligned are you with the horizontal priorities, gender, first-time teams, the IPO initiative itself? How aligned are you with the target areas under InvestEU? And then obviously a normal due diligence on legal structure, fund structure, the terms and conditions of your fund. The team is very important. We're very, very focused on how well the team works together, how experienced they are, how relevant their experience is. And so in the context of the IPO product, experience in public markets is going to be a criteria that we're going to look at. But also team cohesion, how long have they worked together? Even if it's a first-time team, what can we learn about the way they work together that allows us to determine that they're going to be a cohesive team? Finally, what are we looking, in terms of market opportunity, what are we looking for? We're looking for funds that have a strategy that aligns with certain market trends, that understand the market needs that they have, that they're facing. Specifically, and a very important criteria is the last one on the page, the deal flow and pipeline. So if you're going to be presenting yourself to the EIF as an IPO fund, then how will you generate your deal flow in terms of IPO candidates or in terms of funds that are going to be IPO candidates? Will you have enough deal flow? Will it be sufficient to invest the funds under management? Finally, how would you apply? Applying is actually reasonably simple. You go onto the website and you fill out a form. But before you do that, I would suggest that you look at the considerable materials we've put on there. If you go onto our website, either at the URL at the bottom there, or just look for InvestEU anywhere on eif.org, and you will find a large amount of information. You will find something that we internally call the folion, which is a brochure. You click on an image and it takes you to a brochure of InvestEU and all of the conditions attached to it. And then you will find a number of documents, including Annex 2, the call for expression, Annex 2, the term sheet for the call for expression of interest, the call itself, and also the IPO addendum, which gives you the specific terms and conditions for the IPO product. Once you've prepared your application, you fill out a form and we get in touch with you. But having filled out the form and having met us today, I would say there is absolutely no harm in getting in touch with us to tell us that you've done so, because as people deeply invested in the IPO product, Barry and I would very much like to follow all of the candidates that apply to the fund in the context of the IPO product. That's everything from me. Thank you very much for your attention, and we'll be here for questions.
Hi, everyone. My name is Lilian Georgiopoulou. I'm the Deputy Chief Listings Officer here at ATHEX. First of all, let me thank our esteemed guests from the EIF, Vivi, and special thanks to Barry and Nicolas, who you traveled to be with us here today. So thank you very much for the insightful presentation. So now I would like to open the floor to questions. I'm sure there must be lots of questions raised after this presentation. So if you would like to put your hand up. The gentleman here at the front, if you would like to introduce yourself.
Well, good afternoon. Thank you very much for your presentation. Congratulations. I have a number of questions. When you say small companies, what do you mean? What are the criteria for a small company? You want to go on to the other questions or one by...
As you please. I mean, maybe give us all the questions, then we'll take them.
Okay. The second question is, about liquidity. If there are small companies, they have not sufficient liquidity to trade in the platform of the exchanges, including the Athens Stock Exchange. Private investors, you mean private shareholders existing or to come for the finance? Okay, the fourth question, but I have to go and check, is the conditions for finance. They pass from committees, etc., and they have some criteria. If you can elaborate a bit more about the conditions for finance. I mean, what do you examine so that we know to whom we have to be addressing the message? Thank you very much.
So if I may start with a more technical one, there is a very specific definition of what are considered small and medium-sized enterprises at the EU level. This calculates both full-time employees and the annual turnover. So it's SMEs are considered companies with less than 299 FTEs, full-time equivalents, and I think less than 10 million, if I recall correctly, of annual turnover. But this is a typical EU definition, and then I think mid-caps go up to 3,000 employees in terms of full-time equivalent. Up to. More than it's large companies. On this, I can also share after this the link where we have the exact, because there are some quotas that need to be combined, so it's better that you actually have the full picture there. But these are the generic numbers in terms of how we not categorize companies at the EU level. And then for the next, I pass on. Just, sorry, before, one clarification on the final question, you mean the conditions of finance at the company level?
The conditions for financing a company.
At the company level, okay. Just so it's, I need to clarify, okay.
You examine the profitability,
okay, clear.
The growth, the past, the future, what exactly you examine? What are the criteria for the company against a venture capital, against another form of financing? You are more flexible, you have less difficulties. So this is what I would like to know.
I think actually your second and third question are linked. So maybe just to clarify, EIF does not deal directly with small businesses. We operate through what we call financial intermediaries, so banks, venture capital funds, private equity funds. And that will also be the case under this IPO initiative. So EIF will invite applications from fund managers. We will select fund managers and we will commit to those funds alongside other investors in the fund. And that fund will then be managed in a way...
So, sorry, you mean you select fund managers, so we have to apply to be approved, to be certified? This is what do you mean?
I don't know, when you say we, you mean we as a listed company, or you mean we as a potential fund manager? I think we will support, EIF will support a fund. The fund manager will close the commitments from the investors and will start making investments into companies that are listed on a stock exchange, for example. The fund manager will identify those companies. We as EIF are not involved in the selection of the companies. We select a manager and then a manager goes away and it's fully delegated.
Hi, I'm Antigone Liberapoulou from the Hellenic Development Bank of Investments. I have a technical question to ask. What is you say that these IPO funds will need to be, let's say, medium to long-term investors. What is the holding period expected? Is it equal or relevant to the investment period of a classic fund? What would you see as an adequate holding period for the listed shares?
I think first off to say we're silent on this, so it's not that we prescribe a minimum holding period, but typically we back closed funds, so we invest in closed funds that would have a 10, 11, 12-year lifetime. And we would expect that the holding period is around 4 to 6, but there's flexibility for the fund manager to deviate from that. What we want to see, though, is that there's a clear intent of the manager to make these types of investments and hold them, rather than, enter pre-IPO and exit at the IPO, for example, or a shorter holding period. But 4 to 6 is a benchmark, but it's not a hard requirement.
What is the time frame from the time that we submit an expression of interest to the time that you guys have concluded the process?
It may come as no surprise that we're not terribly fast. We typically have, you can expect the process to begin reasonably quickly after you submit an application, but the total process, especially for a first-time fund manager or a fund manager we're not familiar with, can take up to a year. The process is split into four main parts. There's a first screening, which is a fairly simple process, a second screening, which remains fairly simple. Due diligence is launched if at second screening we determine a fit between our products and the fund itself. Due diligence can last a while, and then once the due diligence is complete, there's as in parallel with the end of the due diligence, there's an internal process to reach all the internal approvals. And once that's occurred, there's a negotiation process with the fund in order to finalize the contractual documentation. I would say 9 months for a fund that knows us already and that understands what we're looking for, 12 months typically for a fund from the day they click submit on the website and they can expect to conclude. But there's actually a broad window around that, depending on efficiencies, whether the fund needs additional structuring help, advice, etc.
Any more questions from the audience?
Thank you for the presentation. I want to make sure that I have understood well. The fund that you will give the money to will have to invest in companies that will be listed within the next 12 months.
The fund should have a strategy. For example, if part of the fund's strategy is to invest pre-IPO, well, then that should be stated up front. But then we will back the fund will start making investments. We would expect that a certain number of the companies that they would make investments in have an intention to list within 12 months. That's an intention. The company may not list, may list in the US, for example, but what is clear is that when the fund that we support makes that first investment in that company, the company is considering a listing.
Okay. Regarding the Greek market, this includes a listing in the main market and also in the alternative market, or only in the main market?
The question is whether you, as the allocator of capital into the fund, are you agnostic into what type of platform the listing will take place? Will it be a regulated market or an MTF, for example? You just want it to be public.
Yes. So yes, we are agnostic.
Okay. So after clarifying this kind of question, let me understand also what would be the exit strategy of the fund to sell the participation in the company which will be listed and his shares will be liquid after what time? Because the purpose of the fund is to sell at some point of time.
I think that's linked to the other question about holding periods. So it's fully understood that the fund will exit. But I think because you've seen that we have a focus on this window of transition from private to public, the idea is that the holding period is 4 to 6, like I mentioned. It's okay that the fund exits then, because the expectation will be that company has, it's listed for a few years, should already have established itself, started to build up investor relations, and is not so reliant, or is a bit stronger and able to fundraise independently.
Some hands at the back. Could I please ask you to introduce yourself as well before you ask your question?
Okay, I'm Peggy Papastavru. I'm the listings director here at the exchange. Actually, I have 3 questions. For post-IPO investments, is there a maximum number of years post-IPO that a company is eligible for investment? The second one is that in Greece we have, apart from the traditional venture capital type, we have two entities that can invest in listed securities, but it's mandatory for them to get listed as funds at the exchange. Do you think that this could be an impediment? Should the venture capital take this kind of legal form and become an IPO fund? And the third question, sorry, these two. The others were answered before from you.
So your first question, how many years can you deal with a fund after they've listed? If it's to raise additional capital, i.e. it's additional shares being listed on the market and it's growing the capital base of the company, then up to 10 years afterwards. But if it's trading on the market, buying and selling shares on the market, then the maximum is 3.
And on the second question, if I may just clarify, in the application process, we expect the fund manager to identify what is the correct structure for the funds that they are submitting for our review. So it is for the fund manager to decide the exact structure, where it will be established, and actually make a case against the European Investment Fund, what is the best structure that they will deploy in order to deploy their investment strategy and better serve the companies. Now, from the EIF side, we collect this information, and the due diligence, the extended due diligence process that Nicholas also mentioned earlier, the 4-stage one, includes a number of internal EIF services that include legal services that can actually go deeper into its national law and framework. It includes compliance to understand whether the structure that has been put in place creates any tax concerns or any other compliance concerns. So it is not a yes or no answer. We actually need to see a full application package and go through the details to understand whether what exists in its regional or national regulatory framework works or does not work for this type of funds.
Okay, thank you. And just a clarification, I imagine that during an IPO, more than one IPO funds could participate, correct? Okay, thank you.
Is there a maximum number of funds allowed per country, let's say, or a maximum budget allocated to each country for this IPO initiative?
Yeah, I think the 6.5 billion that I mentioned is potentially, but actually the truth is we've a target of 300 million. And that we're looking
at the EU level?
At the EU level. And actually
not per country?
Not per country. No, and actually linked to the last question, because of the nature of IPO, what we see are actually quite a few funds now that have multi-country strategies. So they might want to invest in IPOs because they need a diversified flow of transactions. They're looking across countries, and actually we've seen a few funds that will target Greece as part of a multi-country strategy under the IPO initiative. So it would, it's entirely possible that you could have two funds support under the initiative investing in the same company.
So there have been launches of such funds already?
No, no. So the InvestEU launched early last year. Okay. But the market environment has not been, InvestEU launched, we need to raise awareness, but then the market environment has been challenging as well. The most advanced fund we have will be hopefully approved by our board very shortly, and that covers Greece as part of a multi-country strategy.
Okay. That's good to hear. Any more questions? Where's the gentleman at the back, and then...
I would like to ask you regarding the sectoral focus of the IPO initiative and also all the umbrella of your funding. Is it going to be mainly technology-oriented, or are also more traditional industries such as hospitality and food sector included in the focus?
As Barry pointed out quite near the beginning of his presentation, we expect a lot of the investments that go through the IPO product to go through the Capital Markets Union product, which is a product that doesn't have a sectoral focus. So as such, we don't expect a specific focus on any given industry. If it were to go through one of the other products, then obviously it would have to have the focus of that product. But no, we don't have that. Now there are certain things that we don't invest in, and you can find those in excluded sectors, but I doubt that you're going to cover any of those with the fund here.
Thank you.
And Adigoni here has a question.
Thanks again. My question is, first, will these funds have to have a multi-country investment strategy? This is one. Could they be country-focused? And when we say country-focused, is it the establishment of the companies or the establishment of the stock exchange? And third, I understand this is a European initiative to, let's say, to hold the companies in the continent and to support them. And I also understand that some countries lack funding in the companies and also have a, let's say, slower activity in terms of stock exchanges level. Are there any preferred terms that will be applied in countries like Greece? And what is the I have posed 5 questions, I know, but what is the maximum investment as a percentage from your side, and what is the maximum percentage of public funds in such an IPO fund? And the question behind it is, can we blend local public funds with Invest Europe funds? I mean, it's an extended question, but I think you understand where I'm getting.
Yeah, I understand. Okay, I'll try and answer, and then maybe Vivi or Nicola can complement. The short answer, it can be, we can back a fund that is 100% focused in one country. So if there's a fund that wants to target Greece only, that's okay. And by Greece only, I mean that the companies are in Greece. It's not that the exchange is Greece, although you'd expect a strong correlation. On the question about cooperation with other public investors, that's allowed. I think I had on the slide about there should be 30% normally private investors at the fund level. There are flexibilities and there are exceptions to that, but it's more technical. But the starting point is 30%, and then in certain areas it's possible to reduce that down to 15%.
Thank you.
Thanks.
If I may complement on the getting more technical, the 15% actually includes a number of countries in which Greece is included. So the countries that have a venture capital or private equity, I think, ratio that's lower than the EU average, they are included in these countries that can actually go with funds with a reduced private percentage, private investors percentage. And this, I think, just to complement a bit on the previous question from Lilian, this actually is how InvestEU does not come with specific quotas for countries, so we don't start with 20% Germany, 15% this and that. Obviously, we're an EU institution, so we want to cover as much of the EU market as we want, and we want to help nurture new regions and new countries as well. The way we go about this is actually by allowing these areas that kind of fall behind to have these flexibilities that are not allowed per se in the already established countries, in parallel with working with more regional mandates to help on the ground to get the markets rolling.
So essentially, you could have a fund that's 50% EIF, 15% private investors, and then the rest, 35%, could come from a local development bank. Yeah.
If it flies for the NPI, though, that's for the InvestEU side.
Just one last comment on your first point about the country focus. There's nothing under InvestEU that says that we can't focus on a single country or a narrowly targeted fund. However, it's worth bearing in mind, again, my earlier point to pipeline, if you're focused on a single country and you're also focused on a sector, will the fund be able to generate? That will be a question that will be asked at due diligence. So the more narrow you're focused, the more the question on pipeline becomes pertinent.
And the gentleman at the back.
Good afternoon. Thank you for the presentation. My name is Ioannis Charalampopoulos. I'm a senior associate at Mahasan Partners Law Firm. A couple of questions from my side is with regards to the eligibility of funds for this product. I understand that the main criterion is the IPO strategy, but the question is, what if a fund does not have an IPO strategy for all its, let's say, portfolio investments, and the IPO strategy relates only to some of its investments, and it's part of its investment strategy? Will this fund be eligible for investment under the product, or it's going to be excluded? That's the first question. The second question, it's, again, related to the quotas. I understand the correlation that there is a specific percentage invested by EIF. But is there a de minimis or a maximum amount, as an absolute amount, not as a percentage, that it's part of this program? So, and the de minimis threshold also not only with regards to the fund, but also to EIF, but also to the fund itself. And the third question is the structure of the investment. I understand that EIF invests alongside the fund, but practically speaking, are we talking about a direct co-investment? Are we talking about EIF becoming a unit holder of the fund? How does it work actually in practice? Thank you very much.
On the first one about the fit of a strategy that maybe does a bit of IPO and a bit of something else, that's allowed potentially. It would depend on what exactly the other bit is, but it's not that it has to be 100% fitting with IPO. And in fact, actually, we would expect that there may be a bit of that because someone may be more early, a bit more pre-IPO, and then maybe doing a little bit of around the IPO stage. On the quotas question, I didn't fully understand, but maybe just to answer, and then maybe you can clarify if this answers or not. But under InvestEU, we can provide a commitment of up to 100 million to a fund, which can normally not exceed more than 50% of the total fund. And then on the structure, to be clear, we invest alongside the other investors, but into the fund typically. So we are an investor in the fund. We do also do co-investments, but that's a smaller part of what we do. It's typically, and what we foresee here actually would be investments in funds.
Any final questions before we wrap up? And then, of course, we can continue outside over some drinks if you have more burning questions to ask. Oh, one final question from Mr. Labropoulos.
For a fund management team to apply for an IPO fund versus to contact EIF to apply to another call or another, let's say, fund structure?
Yeah, thanks for the question. I think it all depends on the investment strategy of the fund. So basically, we have a lot of boring internal cuisine that we always have to tackle every time we have an application. So basically, which exact pocket of money will be supporting the fund? It's kind of a discussion depending on whether they have a mixed strategies, as mentioned before, or whether they have a very specific focus. So I think on our side, we expect very good applications with a very, very clear focus and investment strategy, very good teams on the ground, and that are very clear on what they want to do. The InvestEU application is online, so is it separate? Yeah? Okay. So I think that it depends on the primary focus on the investment strategy. If the primary focus is around pre-IPO and IPO stage, it should go through that application form. But this is up for the fund manager to decide how they primarily want to to direct the focus of their fund. Want to implement?
Just a small element of internal cuisine, but it's useful to know that if you were to apply for one product under our umbrella of products and call it InvestEU or something else, and you were to go to an investment team, and that investment team were to determine that actually your application is much more appropriate for a different product, that would be redirected internally. That is not to say don't worry about your point of entry, because it'll go a lot faster if you pick the right one. But when we see a good investment, we don't turn it down. We find the right pocket for it. We find the right place for it. So yes, we redirect investments internally based on what's most appropriate for them.
And until when are the applications open?
2029?
Okay, until the
end
you
of the
mentioned
programming
that.
period,
Okay,
basically.
great. So I think with that we can wrap up. Once again, thanks a lot to our speakers.